Hi everyone, and welcome back to this advanced technical analysis video. Today we are going to be talking about the Moving Average Convergence Divergence indicator. It's the third of our trend analysis indicators. So let's jump into the MACD. The MACD is formed by subtracting the 12-day exponential moving average from the 26-day exponential moving average, and then combining that with a 9-day EMA and a zero line. So the MACD is our fast line and will cross above and below the 9-day EMA, and that will give us our signal to either buy or sell. Across by the MACD of the 9-day line to the upside is bullish, and across down is bearish. Across above the zero line is bullish, and across below the zero line is bearish, though crossing the zero line is less important than an actual cross of the MACD and the 9-day. If the MACD and the 9-day are trading below the zero line, this indicates that the stock is in a bearish trend, and if the MACD and 9-day are above the zero line, this indicates the stock is in a bullish trend. So the MACD serves not only as a moving average indicator, but also a convergence divergence indicator. And what that means is when the stock price is moving higher as the MACD is moving lower, there's a divergence between the two. And this divergence indicates that a trend change is possible. This is also true in the opposite direction. If the stock is moving lower, but the MACD is moving higher, this indicates that a possible change to either a flat or a bullish trend is possible. So let's take a look at the MACD on a chart in a couple of different time frames. We're going to look at the MACD in a chart of Bank of America. I've already drawn in a support and resistance line in the stock, and this is on a daily basis. So let's go ahead and go to indicators at the top. We're going to type in MACD, come up with the MACD, click that. What we find is that the stock is trading in a range and bouncing off of this support line. If we look at our MACD, as the stock was moving up, we had the MACD above the zero line here in November of 2017. As the stock trended up, the MACD continued above the zero line. And our first sell indicator came here when the stock pulled back in February of 2018. And then the MACD continued down here. I'll draw a line to indicate that. The MACD continued down as the stock was trending up. And there we have a divergence in the MACD and the stock. The MACD should have turned back up with the stock. So this is an indicator that you should be wary that the stock may not hold those levels. And we see what happened. There was a break in the stock and the MACD continued down. So when you get a divergence in the MACD, you want to be wary that the stock may not continue in the trend. We had a buy signal here with the stock moving from the low around 29 up to 31. The MACD didn't go very far over the zero line and crossed back to a sell signal. The stock went back into a bearish trend, which ended when the MACD crossed in July of 2018. We then had a buy signal. The MACD moved up, crossed again, and a sell signal as the stock was at a resistance level. And now the stock has trended back down to support. So let's assume that we want to buy the stock now at support, but the MACD hasn't turned yet. So if we wait for the MACD, which is a lagging indicator, the stock may have already bounced off of support before we actually get back into the stock. So let's look at a closer in time frame. And what we find here on the hourly chart is that the hourly MACD is oversold and has already turned to a buy. So even if we're trading on a daily basis, we can still use the MACD on an hourly basis to inform our trading. And if we look a little closer on the 30-minute, we'll see that the 30-minute went to a buy a few days ago. So there we can use multiple time frames with our MACD. Again, our hourly is a buy, our 30 minutes a buy. Our daily is not a buy at this level, but we can anticipate combining the MACD with support that the stock will bounce from this level. And then we can use the 28 level, probably 27.5 would be our stop at this point, because we need to give the stock a little bit of room to move through the support level if it breaks that level. So our trade here is to go long now, even before the daily crosses to the upside, because we have the 30-minute and the hourly crossing. And that's how you can use MACD in different time frames in combination with support. Thank you for watching this video on the MACD indicator. In our next video, we'll be talking about the no sure thing indicator. I look forward to seeing you in the next video.